And let's get back to the economy, though, and the annual inflation rate, as I said, is up slightly, 3.8% now from 3.6%. The Treasurer says there are some good signs.
Inflation is still too persistent in our economy. It is more sticky and more stubborn than any of us would like. But underlying inflation continues to come down, and that's an important development.
Let's bring in Pradeep Philip, who's lead partner at Deloitte Access Economics, joins us live from Melbourne. A big question here, Pradeep. Does it mean the Reserve Bank will not increase interest rates next week?
Chris, based on these figures, we don't see any need for the Reserve Bank to raise interest rates next week, and we don't think they will. Because if you look at these figures, they tell you a few things apart from the fact that the Reserve Bank doesn't need to raise interest rates. And these are these. First, inflation is not entrenched. It's sticky, but it's coming down. Underlying inflation, the annual rate of that for the 6th consecutive quarter has fallen, and it's now at the lowest rate in 2 years. The other bit about it is if you look at what is driving inflation at the moment, they're predominantly supply-side issues, and they are the things that interest rates won't fix. And finally, one of the reasons why you do think about raising interest rates is if you think demand is rampant in the economy. And Chris, as you would know, if you look outside in the real economy, we see business confidence low, we see people tightening their belts, and we see insolvencies on the rise. So demand is not rampant in the economy. What we actually now need to do as a result of these figures is start to turn the conversation to how we create the conditions that are favourable for business to invest, to grow, to lift productivity and create jobs, because the supply side of our economy is a little bit stuck. So we've got to increase the productive capacity of our economy and lift the run rate of the economy. That's the conversation we need to have, and that won't be helped if the Reserve Bank raises interest rates. But as I said, these figures mean that the Reserve Bank does not need to raise interest rates.
Yeah, that seems to be a pretty broad consensus. They've fallen sort of in a sweet spot where the Reserve Bank would be wise just to sit and wait and watch. But with tax cuts about to flow through the economy and everything we've seen so far, do you think that can hold? Do you think that there is still the chance of an interest rate increase by the end of this year? Or others are now starting to say there could be an interest rate cut before the end of the year. Where do you see the next move being?
Look, Chris, we've had a view for a while that interest rates have kind of done their job, and if you go another rate rise, it's the difference between inducing a recession or a cautious recovery. We have had in our forecasts a rate cut towards the end of this year because we think that the economy is really weak. Again, your viewers will kind of know that business confidence is down, investment is not high enough, consumption is going nowhere, the retail sector is really struggling. You can look at this across different sectors. Things are a bit weak. So we think that the next move in rates will be down towards the end of this year. But what we've got to do is lift business confidence so that business can go about the job that it needs to do, which is invest for growth.